So hey guys, in this video I'm going to be talking about how I choose stocks. I'm not going to go too in depth in this topic because this is a huge topic which cannot be covered in one video. So when I choose a stock, I look at 5 things. Its business model, the growth, meaning the numbers, revenue, earnings, etc., profitability, management, and competition. So to invest in a stock, I would need to fully understand the business. Is it a service, product, or both? How the company makes money, what they do with the money made, and what sector is it a part of. So the numbers. After fully understanding the business model, I would look at the numbers, meaning the past 3 to 5 years of earnings reports. To invest in stock, there must be consistent growth in earnings and revenue. Good balance sheet, so there must be more assets and liabilities. And then I'll look at more things like PE ratio, PB ratio, intrinsic value, and DE ratio, which will be explained in another video. But PE ratio is price to earnings ratio, PB ratio is price to book ratio, DE ratio is debt to equity ratio, and intrinsic value is the actual value of the stock when assets are sold. So profitability. To invest in a company, it has to be profitable, has to be close to profitability. The valuation has to make sense with the profits made and future growth projections, which is PE ratio basically. As said in the previous slides, I look at competition before I invest in a stock. The stock needs to have competitive advantages because usually only 2 to 3 companies have huge growth in a sector during a certain period of time. Management. The management of a company matters a lot because one bad decision could lead to massive backlash. I would look at the past of some management, most notably the CEO and CFO. I'd also look at the board of directors and the experience the CEO and CFO have. So after looking at all that, I would decide if it's a buy or not. Then after all this, if the stock checks out, I would look at the value of the company and not the price of stock. I would look at the market cap. If I think it is undervalued or is a fair valuation, I would buy it because the price of the value would increase within a long period of time. Thank you.